What's going on? Welcome back. Ryan here. In this video, we are talking about the Long Put Condor. Again, I have Thinkorswim loaded up. I have Apple. And just to recap, remember, we've talked so far about the iron butterfly, the iron condor. Right here's the iron butterfly being a combination of that put credit spread, the call credit spread, with the short middle strikes being the same. And again, the iron condor is the same. It's the put credit spread with the call credit spread, except the short strikes are above and below where at the money is. And then we talked about the long call condor, right? Which is a combination of the call credit spread with the call debit spread. And just really important to understand that the long put condor is the same as the long call condor, except it's done with puts, right? So again, if we were to come into Apple here, and we wanted to encapsulate the price of the asset and have a condor around it using puts only, right? Well, we could sell this 165, buy the 160 below it, right? There is our put debit spread. And then at the money is 175. So maybe we come up here and what we do is we sell that 180 put, 185 put. We'll sell the 185 and we will buy the 190. Again, right, this actually doesn't look like it's a very good trade because, if we put this sort of near the middle, we're risking on a one lot here, we're risking $425 to make $75, right? So this isn't really lucrative math in our favor, right? It's I probably wouldn't do this trade, but as an example, it's always good to look at these things and see what the prices are showing us, and then make that decision for yourself, right? Whatever your risk tolerance is, whatever you're trying to do, you should be the one who has the authority to accept that risk and make that decision, right? So again, let's say that we thought Amazon was going to go down. Apple was going to go down. Again, we could come in here and let's say we're targeting this 165 level. So we could sell the 160, buy the 155, right? We're targeting here. So what we do is we can sell the 170 and buy the 175. And now this creates a long put condor where our risk now on the one lot is $150, right? So the 5-point spread, the risk is 150 to make 350. And again, if we look at this, it has this similar shape, right? But because we put this long put condor beneath the market, right, it's going to have the similar shape. But remember, if Apple just stays where it is, we're not going to be making money here, right? We're only going to make money as Apple were to trade down into these wings as time is going by, where then we can close this spread for a profit. Now, this is the last video in this series of option strategies. I wanted to cover all of the ones that I think are the most important, that are the ones that you're going to use most often. And I'm so thrilled that we've made it this far. This is my first attempt at making, an options masterclass or a trading course. And there might be some mistakes I've made, right, or things that I've left out. But I wanted to put this together in its entirety to get I'm trying to take massive imperfect action because I know that I have information that can help traders and investors. Not because I'm right or because I'm the best trader or investor, but because I've gone through these experiences that have given me insight, right? I've already taken and passed several securities license exams, right? So I'm not coming from a place of no experience, right? Super important though to really understand all these strategies, understand how many options you have as an investor to make money in different market conditions, right? This is what separates really great traders from people who lose money, right? Is just number one, understanding the risk, understanding all the options you have, and then, being able to control ourselves and our emotions to make these high quality decisions when we're actually trading with real money. Again, having a game plan, having some insight into our goals and what we're actually trying to accomplish. And then, furthermore, not being too hard on yourself, right? Because trading can be difficult, especially when you're first learning. The learning curve can be steep. Also, what can happen is, you can also find success really fast, right? Especially in the last 10 years with this epic bull market, right? I'm sure there's a lot of false sense of accomplishment, right? With novice traders who maybe have made a lot of money because the market's gone up from federal stimulus, right? Money being injected into the economy. And not to be negative or to shine any bad light on anybody, because that's not my point, but all traders will be tested during or bear markets, right? So you could have lots of success. You could be making money in bull markets, right? The bias is always that the market's going to go up. But there are times when the market goes down, and it's during those times when the market goes down or market conditions get difficult that you're really tested as a trader, and to see if you can, number one, be disciplined enough not to trade when it gets difficult, and number two, be creative enough that when things start to change and market conditions start to change, are you creative enough and do you have the toolbox to make adjustments to still make money, right? And to generate alpha that is uncorrelated to the overall movements of the market indexes, right? So again, I hope you're enjoying all of this content and all of this information I'm sharing with you. I hope that you're enjoying the format that I'm sharing. I really am trying to instill the places where you can fail doing this, right? Again, with the spreads, right? Credit spreads, debit spreads, iron condors, butterflies, all of the spreads where you are buying and selling options together. Remember, the risk is always if at expiration, the underlying asset is settling between those strikes, right? You never want to let that happen unless you're aware of it and you're anticipating it and you're okay accepting that risk of assignment. Okay, so again, I always am going to advocate for, creating more income for yourself, right? Creating more income, having different side gigs, and maybe if you own a business or whatever it is that you're doing, and always try to make more money until you've built up your nest egg, your portfolio to a place where then you can transfer away from those other income streams, and then you can make money purely on your options, your portfolio, your investments, whatever it may be. And, again, I'm always going to advocate for paper trading until you have enough confidence to execute these during market hours with your own money and you're confident enough to get in the position, get out of the position, know how it works, know where the risk is, and all that stuff, right? So again, if you have any questions, feel free to reach out. If you're interested in one-on-one coaching or mentorship, maybe you're interested in getting your Series 3 license and becoming a commodity broker. Maybe you want to start a fund. I am highly knowledgeable about those areas as well. And when we get into these next sections, we're going to talk about these. But I'm super thrilled that you made it this far and you are applying yourself and learning all of these strategies. I know that in your future as a trader, as an investor, this information is going to be so useful to you because nobody will be able to confuse you, right, with investments or investment products, right? Because when you understand the underlying assets themselves, when you understand technical analysis, historical analysis, fundamental analysis, you have all of these tools, you understand all of these things, no one's going to be able to confuse you, right? You'll always be able to look at a statement, to look at a trade, and know exactly what somebody's intention was, what they were trying to do, whether it worked out, whether it failed. You'll know why that happened, right? Because you understand where the risk lies. You understand the mechanics of the options and how they relate to the underlying asset. And that is my goal, to empower you, to give you the tools and the experience and the confidence to go out and crush these markets yourself, not having to rely on anybody. Now, again, as you think about your trading and where you want to go and your goals, if you decide to become a professional, maybe you want to have a fund, whatever it is, eventually you're going to come to the realization that to create an entity and a structure that can manage and facilitate risk on behalf of clients, managing millions, hundreds of millions, and even billions of dollars, not only do we need a very high level understanding of the assets and the options and the strategies, but we also need to think about having a team, right? Because none of these big hedge fund managers and none of these really successful traders at their level do it by themselves, right? They have teams, they have helps. It's a collective mentality working towards solving that problem, right? And really important to understand that. So again, I'm super thrilled. Let me know what you think. Let me know if you have any questions. And I look forward to talking in the next video.